Welcome to TradeTheNBA.com. This is John's reports for the 20th of June. And, well, we continued off with a little bit more of that fade off. It's not really that much of a big deal because it was all quiet. And you could see that we got a rejection so far starting the day with the MBI white versus crossing magenta the other day, which obviously led to that decrease. But you really need to see that turnaround in magenta that would spark your next rally, as well as pivot of DOC. From the green standpoint, you see both. Everyone's just on the sidelines. Uncertainty like this with the war footing, and Trump saying that he's going to take maybe up to another 2 weeks to make a decision. You can see also from an extreme standpoint below the red line, if that continues more than a day, then yeah, be concerned. But you can see shakeout clearly negative. So until that reverses course, but you can see you've completely eliminated the momentum you had from the rising gold, and now we're into the fade off of that. So, it just puts more downside pressure on things. It's just a question of, when are people satisfied that the fear level is enough that you don't have a choice? You're going to have to either sell or add back in. Um, with rates as high as they are, you can sit on the sidelines for a little bit longer. So that's an interesting thing that the Fed has created, sort of a counter to the market. And it's effectively enough yield, especially with given what inflation is really running at, assuming oil doesn't stay elevated. And of course, that's the big if right now. From an NQ standpoint, a very bit better even than the Nasdaq. It didn't quite dip down into that extreme histogram where we're below the red line, so it's not quite the distribution, but still also negative shakeout. So again, not great from that standpoint, at least from a turnaround standpoint. Of course, you can ignore what's going on in treasuries at this particular stage because it's a non-event, which is ironic given that what's happening in Europe. We saw Switzerland, Norway, and them all lower their overnight trading rates because the Eurozone obviously is struggling from this. And this is the Strait of Hormuz thing really puts pressure on Europe, uh, which is already under extreme strain from lack of growth. Uh, so it's odd when you see things like the euro and that performing as well as they are to the dollar because their economies are not growing anywhere near the relative space. You don't have 2 weeks, at least from a Trump standpoint, before inflation will be hit with this. You're going to see that pass through because it affects everything. So, yeah, this is problematic and it'll definitely create what the Fed is declaring will be a tariff situation and nothing to do with. It's all about energy costs and how much you can perform within that energy range. You can see the euro still holding on with bizarre levels given what the situation is. But it's really this attack on Trump's view of economics. They really don't want to support it in any way, shape, or form. And this is a way to do that. But it's going to be costly because it was the U.S. Think of it as a vortex. The changes that are made have started a slow spin, but the further you get into the fact that he's made those alterations, you start to pick up a momentum. And the further down that vortex you go, the faster things begin to spin, even if the Fed does nothing. Now, the question is when you have a slowing situation, the same thing works in reverse towards recession. Once a momentum starts, it's hard to reverse it. And so it's kind of we're in this early stages of this developing, and uh, either direction can play out at this particular point, and it doesn't help with where rates are because when you think about it from a deficit standpoint, things like that, the amount of borrowing costs for the U.S. could drop dramatically if rates were reduced to level relative to the inflation rate, and that would definitely be a boon at least for growth, particularly since you've switched from the idea of government spending as growth versus private enterprise, which is always a huge improvement to GDP. And you reduce government spending to a GDP increase, and boom, you're amazed at the results that you get. Time and time again, we've seen this result. It's not something that the Keynesian model likes. They think of just the opposite. Gold definitely not excited by the fact that the rising tensions haven't taken place, and with lower inflation numbers, unless they see that reverse. But you're going to start to see it with if oil remains where it is. But the crash for oil could be quite hard. Now, of course, the Russians very happy with this situation because it certainly helps aid in their war effort. The Iranians, not so much because they're not really able to do anything with their oil at this particular stage. From a Bitcoin standpoint, it held on quite well and it bounced back beautifully from that move. And of course, you continue to hear the whole AI theme song of how it's going to change everything. I guess that just depends on your view of what you think AI is going to do and what it can do. I think it's quite limited in its potentials. It can do routine, mundane things, but from a decision making standpoint, it's speculative, especially with given the parameters set for it. So we can look at it from a 50K standpoint. We ended up with the MBI white lead. We were at the 50K, uh, broke down below that. So the expectation was to the zero. We just had a little bit of a stall out as it dipped. And once it popped back up again, that was right around the 38% range here. Yeah, cascade to the zero and then made new ones. So we tested the lows from the previous range, taking us all the way back to beginning of the month. So that was clean, but you can see the immediate reversal off of that, and get put buyers jump in, and then the calls are bought after the fact, and it just flips it all around. And you can see it was pretty ugly most of the day. And it's the rhetoric that does it. It is what it is. And then they take the after-hour market where things are weak, and you can see the gap up was immediate. And now, things will open up and options will be completely flipped on that, and you have a big expiration happening. So more and more of the game, you just have to continue to follow the readings on it because we see it clearly as to where the players are going with it. And it's about gamesmanship at this particular point because the economics of it, they're muddled at this particular stage. You're unable to get any real clarity from that. And until we do, um, it's just a little bit of back and forth. It's still relatively excellent levels here. We're over 6K. So, uh, really can't argue in that standpoint from that view. It's still doing just fine. So that's the long and the short of it for now. As always, though, anything relevant, I'll let you know on the team chat. Have a good one. Trade well.